Adobe released their latest quarterly figures Wednesday after the market closed. The quarter was a pretty good one, but the problem as always is guidance. Guidance was a miss for the next quarter and for the next fiscal year. At the time of making this video, the stock is down close to 12%. We're back under $500 to now $485.6. Now, year to date, the stock was already down 7.8%. So now with the after hours pre-market action, it's not going to look that great for Adobe stock, which could also present a good opportunity for long-term investors, because all in all, this is still a solid compounding company and will now trade at a cheaper valuation than before. If you look at what the analysts are expecting this company to do for the coming fiscal years, still low double-digit growth, right? Around 11% year-over-year growth for sales in fiscal 25 and 2026, and EPS growing a little bit faster than that. We can even see here that a couple of analysts have already updated their price target. Most of them are still around $600, which if you look at what happened before the reported earnings, the average analyst price target was $612, which represented close to 12% upside from the price it was before the reported earnings, which right now represents a much bigger difference. Over the past 5 years, shares outstanding for Adobe have come down by 8.74%. And if we look at some pricing metrics for PE, to EBITDA, price to sales, price to free cash flow, and price earnings to growth, it is lower than the 5-year mean. So you're now definitely not paying a premium for Adobe stock, but yes, it's true that more risks are rising, and yeah, maybe the market does want to wait and see how they're going to monetize the, generative AI tools, right? Is it with credits, higher prices? Is that going to work? Yes or no? And if that's going to work, why isn't that reflected in guidance? So let's discuss all of that in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as always, we'll start here with a major overview by Consensus Guru. So as you can see for the quarter, a beat across the board, right? Revenue, operating margin, operating income, EPS, cash from operations, a big beat there by 10.2%. Then new digital media ARR beat by 4.6% and RPOs beat by 2.2%. That's actually up 15.9% year over year. But the issues are with guidance. Q1 fiscal 2025 guidance missed by 1.1% for revenue. Not such a big miss, but still a miss. And then for the fiscal year 2025, let's call it a miss across the board. A small beat here with regards to digital experience subscription revenue. But all in all, even the misses, right? You would think, oh, the stock is down 12% or so. The misses would have been big. But no, the misses are what, 1-2% or so? So not such a big deal. Maybe an overreaction, maybe even opportunity to buy more shares. Because overall, this is basically what happens. Total revenue is up 11% year over year, with subscription revenue up 12.6%. Product revenue is down 28.9%, but that's really a tiny part of the revenue pie. And then services and others is down 6.4%. Now, if you look at cost of revenue, subscription revenue is up 12.6%, but cost of revenue for that segment is down close to 6%. Product revenue flat. Services and other is up 9.7%, while revenue for that segment was down. But overall, total cost of revenue is down 2.84%, which is great. Gross profit grew 13% year over year. With regards to total operating expenses, that's up 13.5%, with the big increase coming from G&A. That's up 22.5%. And so operating income is up 12.2% year over year. Now, all in all, if we zoom out, we can see that Adobe's business has been growing quite nicely for the last 10 years or so. Revenue grew at a CAGR of 15.88%. We've seen the expected growth rates for the next coming fiscal years, but now we can also look at the free cash flow growth rate. So fiscal 2024 was basically a downish year for free cash flow, right? You can see the drop right here of 14.1%. But in fiscal 2025, it's expected to increase by 32.2%. Now, will that happen or not remains to be seen, because as we've seen, guidance was a bit weak. And if we zoom out a little bit more, we can see that for gross profit margin for the last 5 years or so, it's been around the same. It has been increasing a little bit in the last couple of quarters. But what did not increase much, and we still need an updated number here, but it's still far away from the 40% plus levels, is free cash flow margin. So yes, revenue continues to go up, but we would like to see more free cash flow as a result. Now, if we look at the different revenue groups for the business, so we've got Creative Cloud revenue, Document Cloud, Digital Experience revenue, and Publishing and Advertising revenue. That's the smallest part right here, the green one. All in all segments have grown quarter over quarter. And I mean, if you look at the change in the last 4 years, Creative Cloud revenue is up 81%, Document Cloud up 140.17%, Digital Experience revenue is up 85.39%, and then Publishing and Advertising revenue, that's the one that's down 61.54%. But all in all, what do we see here with regards to ARR? So Creative Annualized Recurring Revenue, Document Cloud, and Digital Media. All in all, this is a solid growing business. Might not be growing 30-20% or so, but over the years, this thing continues to grow at a nice pace. And yes, it's true, with the rise of generative AI applications, features, tools, whatever, it's true that it might hurt a business like Adobe. But remember what has been happening with Adobe, or especially on social media, right? The cancel Adobe, terms and agreement and all of that, those scandals, right? You would have thought that the business would have been hurt already right now. Now you might say, okay, maybe we're going to see this in the coming quarters, but I've been hearing the same thing over and over again. So clearly the business is strong enough to fend off these small, let's say, social media activists or whatever you want to call them, because they create some great tools, let's say, not the cheapest one out there. But then again, if we see the business continue to grow, that means that enough people are willing to pay for those products and solutions. And yes, with the rise of generative AI, you would also have thought that we would already see the business go down. And clearly, right now, we're seeing it go up and to the right. Now, yes, guidance has been a bit weak, a small miss, but nothing that really indicates that, oh, this is a dying business. Now, I'm going to read you a couple of things that were mentioned in a Bloomberg note that might explain why the stock is now going down 12%. Adobe has been adding its proprietary AI technology, Firefly, to products like Photoshop and Illustrator, but it's rolling out its AI video products much more slowly than OpenAI's rival Sora service. I'm sorry to say, but I've seen some videos from Sora. They look very nice, but they're not realistic at all. Like, some things are happening there that just don't make any sense. But okay, it's probably going to improve quite quickly in the coming months and years. The company said last quarter that it has been focused on making sure customers use its AI features rather than seeking to directly make money from the tools, a strategy that is starting to test investors' patience. And this is something actually that we've been talking about for the last 2 quarters. Adobe discussed pricing for its AI video tool at its annual conference in October, but analysts aren't factoring in much uplift yet. The consensus estimate for net 2025 earnings and revenue have both slipped over the past quarter. And yeah, this basically here at the top is the reason why the stock is coming down. Focusing on making sure customers use its AI features rather than seeking to directly make money from the tools. And let's be honest here, it's a smart move, because imagine you're launching new products and you're directly hiking the prices, you're directly making it a premium tier. Like, if you don't pay more, you will not get access to the new products. Then, in my opinion, that will just hurt the business, because less and less folks will get exposed to those features, because not everyone wants to pay to try out a new feature. On the flip side, I can understand the folks that are saying, look, you've been trying these things out for a long period of time, it's still free. We can probably know already right now by the data whether or not people are willing to pay more, right? Acquire more credits to generate more things in the Adobe ecosystem. So why aren't we seeing the monetization part of it? Is it a pricing issue? Is it a demand issue? Competitiveness? What's the issue here? And that's basically why the stock is coming down right now. Maybe it's an overreaction. I think it is 12% down right now. It's not like the stock has been going up and up and up throughout this year. No, the stock was already down year to date, and now it's down even more despite still being quite a solid business, right? Free cash flow generating, acquiring more shares, growing revenue. So, okay, maybe it's an opportunity. Maybe it's an opportunity for those of you that are long Adobe. But of course, you will have to wait until we see the monetization part of all of its AI features. And so right now, if we look at the stock, we're going to be quite close to testing that uptrend line which started back here in September of 2022. Has previously been respected back here in May and here at the end of October. So let's see what happens. Maybe this might be an opportunity, and if not, then yeah, look down below and then you are entering basically no man's land territory. But on the flip side, we've seen plenty of times where pre-market the stock is down 12% and then throughout the day, it's a green day, market realizes it's an overreaction and suddenly the stock goes back up. Me personally right now I have no position in Adobe, but it's a solid compounding company. Right now I don't see any major signs of that changing anytime soon. So overall, that's everything you need to know right now. If you enjoy this type of videos, give it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.